So hello everyone guys, and today I'm gonna tell you about scalping in smart money, how to use it properly and the best ways how to analyze your charts. And of course we will touch on other types of trading and I will give you some little information about it. I will teach you how to analyze 4-hour time frame chart, 1-hour time frame, and how to enter a deal in 1-minute time frame. And of course I will tell you one secret thing about exchange funding in the end. So drop your likes and let's begin.
Don't forget to subscribe my Telegram channel where I write my thoughts on the market, useful information about trading and post my trades. Have fun!
Have you ever wondered how professional traders make consistent profits in minutes? The secret is scalping, fast, strategic and insanely precise. Scalping works because it's focused on short-term opportunities in the market. The beauty of it, you don't need the market to trend for hours. Instead, you are taking advantage of smart money movements, quick bursts of liquidity grabs and price imbalances. Think about this. Smart money leaves breadcrumbs behind every move. These are FVG, order blocks and liquidity zones. As scalpers, we follow those breadcrumbs to catch the moves that happen within minutes. But here's what most people get wrong. Scalping isn't just about speed, it's about precision. That's why the top-down approach I'll show you today is a game changer. Let's start by talking about time frames. When it comes to scalping, time frame mastery is your foundation. Think of it like building a house. The 4-hour chart is your blueprint. It gives you the big picture trend direction, smart money zones and where liquidity lies. The 1-hour chart adds detail, it defines those zones and shows where smart money might be targeting next. The 5-minute chart is where we plan our attack, identifying imbalances and setting up for precise entries. And finally, the 1-minute chart is your sniper scope. This is where you pull the trigger with precision. So now let's talk about another types of trading. Day trading, it's when you're in and out within a day. Day traders open and close all their positions within the same trading day, avoiding overnight risk. Trades typically last from a few minutes to several hours, focus on daily trends, patterns and new events, uses intraday charts like 50-minute, 30-minute and 1 hour. It's for full-time traders who can dedicate their entire day to monitoring the markets, those who prefer avoiding overnight positions and associated risk. But it requires significant time commitment during market hours, and emotion control is crucial to manage losses and avoid impulsive trades. What about swing trades? It involves holding trades for several days to week, aiming to capture lateral price movements. Trades, it's about trading class from a few days for weeks, combines technical and fundamental analysis, commonly uses 4-hour and daily charts to support trends and reversals. Who is for? Part-time traders who cannot monitor the market all day, those who prefer a more relaxed pace compared to day trading or scalping. Why it is dangerous? Overnight market moves can cause unexpected losses and patience is required to let trades develop fully. And the last type of trading, what I don't really prefer, is position trading, the long-term approach. Position trades focus on the bigger picture, holding trades for weeks, months or even years, relies heavily on fundamental analysis and long-term market trends, use weekly and monthly charts for decision making. It's for investors who prioritize long-term gains over quick profits, those who have limited time to monitor the market daily, and it faces a deep understanding of economic and market trends, and patience and discipline are essential for long-term success. So now we are on the real chart example, and in scalping strategy we are ready and prepared for analyze from 4-hour time frame, because we need to identify the price movement and the price structure. So for training we choose this zone of price movement, and let's begin with the defining of our market structure and our point of interest. Here we can see our first higher high, second higher high, what broke the structure on the left side, and it's prepared us for the uptrend movement. So here on our high high and on our high high. Here we have fake breakout structure, what are confirmed with this high high, what broke the previous high high, and our fake breakout structure, and after that we have continuous uptrend movement. So let's define our point of interest on the 4-hour time frames from which we can enter a deal, and when we move to the lower time frames we will identify them and look for the opening the positions in these zones, because the price are gonna get the reaction from it. So here we have one FVG, after that another FVG. Here we don't have FVG because the price are fulfilled it already, but here we can determine our order block from which the price are gonna get direction. Here we have our distribution, and here we can trade by the sideways movement trading guide what I has on my channel, and you can watch it. Here we have our Fiji. So now we are analyze our chart. We can see different point of interest zones from which we can open a deal. We determined our trend. We have a long trend, and we are going to open a long positions. And after that, we are going to the 1 hour time frame and analyze it. Now we are moved to the 1 hour time frame, and here we can make our thoughts more confident and look for the liquidity pools, liquidity grabs, and our things, and get a new knowledges. So let's start from the beginning. Here we have our Fiji, what we have mentioned before, and after that the price get reaction from it, and it means what? The uptrend movement are gonna continue. After that we have filling of our Fiji from the 4 hour time frame, and again uptrend movement. And after that here formed another Fiji from which the price get reaction, and of course it's gonna be an hour uptrend. Let's mark our Fiji zones by the hour color. It's gonna be from the 1 hour time frame, our point of interest from which we can open a deal. And let's watch on our sideways movement, and by my methods here we can open a good short positions with 60% fixing the revenue. Here too we can open a good short positions, but after the third grab of liquidity we can open a good deal to the long positions and get a good money. And here we have our local downtrend movement. We are gonna mention it like that, and now Fiji like that. So let's remove our marks of trend because we already determined it, and let's place our marks on the pools of liquidity. Here one, here and now which are grabbed. Now one here, one here. The most valued liquidity pool. And now we are moved to the 30 minutes time frame, and here we are going to determine our goals. And let's begin from the start. Here, as always, we can open a good deal with very conservative stop loss, and I mistake, it's not really a good deal because here we have our risk ratio from 1 to 2, and it is not gonna be a good risk reward ratio, so we don't open the deal here, and we are waiting for our price entering our point of interest. For example, here we have a good example on the Fiji. We can place a good deal with conservative stop loss and open it. So it is another example of bad deal, and we don't gonna enter in it. After that, we are moving to our sideways movement, and here we can open two good short deals after capturing the liquidity, and now capturing of liquidity to the short. So let's remember it. Let's move to the 50 minutes time frame, and here we are gonna open our deals. So here we have one entry from we are determined uptrend movement, and we are waiting for the forming of confirmations on the lower time frames on the 50 minutes for entering a scalping deal. For example, here we can enter from the 50 minutes Fiji with very good conservative stop loss and get a good risk reward ratio. After that, here format another Fiji from which we can open a good deal with conservative risk ratio, place it to the 3, and here we can get another good deal. Now we are moved to our sideways movement, and here we can open a good long positions because we don't have a derogation here on the lower pools of liquidity, and if we have a derogation here, we can open a good deal to the long meanings. But now we are studying scalping movements, and here after this derogation we are waiting for the entering to the short positions. And for example, here we can determine now Fiji and enter from 50% of it is a good stop loss. It's risky, but don't worry. And the risk reward ratio about 1 to 4, and get a good risk reward and a good profit. It's gonna be a very good scalping deal. So now we have derogation what captured all the liquidity on the top, and we are waiting for the short movement. After that, we can see the Fiji here, and of course place the short movement deal from its beginning is a risky stop loss, and place our deal on the capturing of liquidity and filling the Fiji on the left side. In the last example here we can see the fair value gap. We are placing our end of the deal about 1 to 3 risk reward ratio, and with conservative stop loss on it. And why we are sure what our price are gonna be long, because here we have our free tap setup formation, and in which the liquidity get 3 times on the higher time frames and on the lower time frames and we can understand what the price are gonna move to the long positions. And the most important example here, we have our price water coming up to our point of interest zone. It's a bullish FUG, and we are waiting for the bullish movement. After the price get reaction from it, we get now FUG water format, and from this we are gonna open a long deal because we has a breakout structure on the low time frames here, and it's confirmed here. So after that, we are opening a deal on the capturing of all liquidity on the left side, but not gonna be really risky, with conservative with a risk stop loss. And after that, we get our deal just in 1 hour. And guys, don't forget what if you are trading with scalping strategy, you need to open deals with a great amount of money and with leverage. And if you open deal and it is not gonna be successful, don't forget what the funding existed, and it's gonna eat all of your money. For example, you can risk $10, but at the end you will see minus $60. To avoid it, use calculators in your browser, find it and trust them, or get a settings of trading view on inputs. For example, if you are gonna risk by 1%, place it on the meanings like that, and you will gonna be safe from the funding. Thank you guys for watching. Follow all my social media. Don't forget to drop your likes, ring in the bell, and thank you for watching.